Hi, this is Daniel with Unrivaled Investing. Today we're going to be talking about nCINO, ticker NCNO, going into the fundamentals of the company. What do they do? As well as trying to understand, do they have legs to continue growing at a fast pace? Does this company have the fundamental dynamics that drive 5 to 10x upside over time? Let's dig in. So the goal of this video is one, what is nCINO? What's their business? What's their value proposition? Is it unrivaled? Uh, what do their financials look like? And lastly, there's a free investment calculator that's below this video where you can pencil out what you think the upside downside could be. I show you what I pencil out, the current risk reward. So that way you could start thinking, does this have 10x upside from here? What's the risk reward? But before digging in, if you're interested in stocks that could potentially go up hundreds or even thousands of percent over time, hit that subscribe button. If you're already a subscriber, hit that like button. And if you want to know what I personally am doing month to month, what am I investing in, what are my thoughts, go to unrivaledinvesting.com, click on Journey. You can see my personal portfolio, what I'm buying and selling, what I'm holding each month with the rationale for each of my top positions. Also, anyone that is a subscriber at Unrivaled Investing Journey, they effectively are patrons for this channel that enable the continued production of these videos. So for all my existing subscribers, thank you so much. I hope you're enjoying these videos. If you have any questions or are there any stocks you want me to take a look at, feel free to leave a note below in this video. So why did nCINO get my interest? First of all, it's a new IPO. So it's new to the market. It's a new player. The day that it's first started trading, it opened up over 100% higher. So there is some excitement about this company. I'd love to understand why. And there is some stake to the sizzle. It's not just, a pop in a stock where people are like, hey, this could be an interesting company in the future. As I've dug through their financials, it's apparent that there is a real there's a real company here. Their top line growth is over 50% at this point. So, there is something there. There's a real product. Let's dig into that. So what exactly does nCINO do? So what is nCINO? It's a platform for enabling banking. They describe themselves as an operating system that enables banks, either legacy incumbents, banks that have been around for literally hundreds of years, or upstarts for the modern era. So it's taking legacy banking and making them modern. What does that mean? So it's software and automation tools to enable processes like onboarding new clients, loan originations, and credit analysis, which are all critical functions of banking. Let's flesh this out in a little bit more detail. So that way we can both be on the same page of exactly what this is, exactly what's their value proposition. So before fleshing out their value proposition, you need to understand like the basics of what does a bank do. And this is, level one banking, which is that a bank brings in deposits. That's step one. Number two is they pay out some sort of interest on those deposits, so that's a cost. Then they have interest income, where they take those deposits and then they loan them out to any sort of counterparty that seems creditable, or may be buying some sort of asset that they can lend against, whether or not that's a house or a building or a business. And so they loan out that money. They loan out those deposits that have come in. They're paying the deposits, and they get interest income from their loan book. And then they make money on a net basis on the spread, where you have this interest income from your loan book, and then you have a cost, your interest expense from your deposits, so how much you're paying your depositors, and then you have your basic administrative costs of, hey, who's the loan officer, who's the teller at the bank office. So you have these different components that drive the business: deposits, interest income, and that spread. What's critical is nCINO touches all the critical parts of a banking business model, and that's why they're very relevant. So you can see here, this is the image that they show, that they're touching all the critical parts of the typical bank process, whether or not it's onboarding a new client. Hey, let's make sure we can make sure their deposits get into our bank without a problem. Let's make sure that when we're originating the loan, there's no problem, that this is a good credit, that it's easy to create the loan docs, and that we're correctly coordinating with everyone, so that way there's no processes. This is all about workflow automation. Traditional banking, you're thinking stacks of paperwork. It's a very manual process. There are lots of bottlenecks. This way, everyone can be on the same page and tracking what is the progress here, what's the checklist to get you from point A to point B. If you need a loan, what are all the steps we're going to need to get you there? And that's what they're touching, is they're creating this workflow so you can see it, whether or not you're an client, that's looking to do business with nCINO, you're an employee, or you're a third party. And third parties can range from several different folks, but you do have these third parties that are very critical to getting basic banking business done, like you're an appraiser, like you're a regulatory authority, like you're a lawyer, or you're another bank. It's critical that you're able to incorporate those third parties in a workflow system so you can see what's going on. Everyone can get pinged at the same time. So this is key. Loan origination, deposit account opening, as well as business process automation. You can see all these different elements like compliance and risk management. You don't want to be opening up accounts or providing loans to folks that are either bad credits or just create problems for you longer term. You don't want to create loans, provide loans to the mafia, for example. That would create problems for your business, especially when it's time for the bank to have some sort of regulatory review. Are you making loans in a concentrated space to a bunch of folks that you shouldn't be making loans to? Maybe they're not credit worthy. And so then you can see the last component is this nCINO IQ, which is the analysis of the credit portfolio. Are you analyzing like the loans you're making, are they good? Or are you taking unnecessary risks? So nCINO touches all the critical parts of a bank business model. So in summary, it's out with the legacy systems, in with nCINO. The legacy systems are stacks of paper, endless spreadsheets, disconnected point solutions, and manual processes. Anyone that's interacted with a bank, whether or not it's opening up a new account or getting a credit line, can vouch for this process, that it's long, manual, and there's so many steps, and it's not clear where the bottleneck is. You have to call your banker often to understand. Legacy systems are a royal pain. Replacing it with automated collaborative workflows stored in the cloud. So it's not all on some bank server. Everyone could be able to access this data to see where are you in getting, let's say, a new account opened or getting a loan approved. So what's this imply for nCINO? And I feel like it would be worthwhile to read a couple of their statements about their business and me to sort of interpret that for you. So that way you can see the difference between investorese and basic, plain English. So once implemented, our solution becomes deeply embedded in our customers' business processes, enabling mission-critical workflows across the financial institution. So deeply embedded means very sticky. You're not going to be ripping this solution out next year. And they said critical workflow, aka in order for the business to work, we need to have this. Let's keep going. The nCINO bank operating system connects the front, middle, and back office employees of a financial institution with clients and third parties across lines of business. Okay, everyone's impacted, whether or not you're a teller at the front desk to a loan officer or someone that's just processing everything, in the back office. Everyone's going to be impacted by this. If you're a regulatory authority that's scrutinizing their books, everyone could be impacted by this. And it connects them with banks. It connects banks with clients, other banks, and critically other third parties. I've mentioned this before, like tax agencies, regulators, appraisers, and lawyers. Let's continue. So then they go, we deliver data analytics and insights into their operations, such as tools for analyzing, measuring, and managing credit risk, as well as to improve their ability to comply with regulatory requirements. Okay, managing credit risk equals not blowing up their business, because it's a way of saying, hey, did you make a bunch of really crappy loans? No, let's prevent you from doing that. So aka managing your credit risk and comply with regulatory requirements. Don't break the law and you don't get shut down. These all seem like pretty important stuff for a bank to do and for a bank to continue to operate. So how sticky would nCINO be? Like, hey, you don't want to break the law, you don't want to get shut down, and you don't want to blow up the business. These seem like pretty important things. So how sticky is nCINO? I think it's going to be sticky as heck. The initial deployment for their solutions take 3 months for small community banks, over 18 months for global financial institutions. This is a serious pain to implement. It is touching so many different counterparties and players, all even just looking within one bank. It takes a long time to get it all connected to make sure it's working properly. This is a serious pain to implement, and when it's a pain to implement, that means you're not going to be switching tomorrow. Once you're stuck, you're going to be rolling with this for years. These are long-term relationships. I mean, this is looking at decades. Part of the reason why, when people think of like shotgun marriages in Vegas, part of the reason why like the divorce rate's so high is because you can like get it done with so quickly. Like, boom, you're married, and then like, boom, you can get divorced pretty easy. But when it takes like 3 months to get married or 18 months to get married, like that's a process. You are committed to this. And so in order for you to like divorce or split up, this is going to be, you'd need years and years. This is decades. And that, thinking about that, that does reinforce the idea of an unrivaled value proposition for nCINO. And as regular viewers know, I look at everything through the lens of unrivaled value proposition. Unrivaled value proposition means that you have some sort of good or service that others don't offer. And when you have that, that means there's the real potential for sustained high growth rates. And sustained high growth rates translate into fantastic investments. So that's why I always focus on unrivaled investing, or unrivaled investments. Does this company have something that's unrivaled in the marketplace? Do they have a UVP? We're going to figure that out. We're going to keep going. So let's see how they've done. They've had a land and expand strategy where it's, hey, let's just get our foot in the door, talking about client onboarding, and then maybe 6 months down the road, 12 months down the road, we can upsell them on portfolio analysis. Are they making good loans? Or maybe loan origination. We can sell that workflow tool. So that's what you've seen in their results, where their 2013 business, it's almost up 3x since then. You could see each of these cohorts has grown at a good clip. It started off as selling this tool, and then they're selling more. And maybe it starts off by selling in one geography, and this is a global bank, and let's start selling into more geographies. You need the same. A global bank is going to have loans no matter which geography they're in. And you can see that in their revenue retention rate of 140%. This is a fantastic figure. It implies that the business at the start of the year without any new clients would be up 40% by the end of the year. So and you could see that that's been their rate over the last few years. It's actually been more, but as they've gotten bigger, that rate's declined. But 140% revenue retention rate's very good. So who are they competing with? It's primarily legacy systems, built by the banks that they're offering. So it's built by their customers, and they may have worked with some sort of system integrator to sort of piecemeal something together where you have this client onboarding, with deposits, somehow it's supposed to integrate with loan origination, and it's supposed to integrate with regulatory, framework, and then, loan analysis. And so they're primarily competing against this sort of piecemeal solution. And they also compete on the perspective of having this wide breadth of products where they're, soup to nuts, from onboarding a new client to analyzing your loan portfolio. And so that is valuable, and it's certainly valuable and competes well against single solution providers. And then another key component is that they're growing at over 50% a year, at least based on their 2020 financials. And overall, the banking industry is not growing that fast, outside of a couple of disruptors. So their growth rate is, a data point added to the thesis of, do they have an unrivaled value proposition? So do they have an unrivaled value proposition? I think so. I'm giving a thumbs up on the value proposition. And you can also see this partly with the caliber of customers they have. Bank of America, TD Bank, US Bank, Santander, Allied Irish Banks, Barclays, KeyBank. A lot of these are major names, household names, and all these data points of being so sticky, primarily competing with in-house solutions. This all smells like an unrivaled value proposition. When you have a company that's growing this fast, 50%, versus the general banking industry, which may be, low single digits, this means you're offering something, you're offering a critical service, and there's something special here that's going on. That's how I see it. looking at this. This strikes me as an unrivaled value proposition. And then the next question is, how big is this market? Is this just, are they filling their market real quick, or does this have legs? And management thinks it's a $10 billion market opportunity. They didn't really flesh that out, so I sort of do a back of the envelope here, which is, they talk about how there's 28,000 financial institutions worldwide. And so if you think that their value add is the equivalent of a couple of engineers, and engineers could cost you, between server costs and just the engineers themselves, could cost you at least a couple $100,000. I'm penciling out $350,000 for a couple engineers, server costs, everything. 28,000 financial institutions, 350,000, that gets it to 10 billion easily. And so honestly, when you have a company that's literally dozens of engineers, it's way more valuable because you have solutions that scale. So management saying $10 billion market, that can make sense to me. And based on their existing revenue, that's about 1 to 2% market capture. So this would suggest that this is the beginning of a multi-year run of growth, organic, and potentially, M&A, where they're buying other players, where they could, buy other solutions that add to their broad appeal. And, potentially this business is 5 to 10x, in a few years from now. So the potential for that definitely, seems logical. Like, I'm not arguing that but this business doesn't seem like it's gonna get disrupted overnight. This seems like it has legs for years and years. So what's actually driving demand? We already talked about the legacy systems, but there's sort of secondary drivers that are worth understanding as well. One of which is low rates. In an environment of low interest rates and limited spreads, because deposits are at zero, and the bank loans are getting down there as well. You need to make sure you get the most bang for your buck with your limited overhead funds, your administrative costs. So when you're making an investment, you want to make sure you're actually getting, a good bang for your buck. And that's where nCINO fits, is that they're saying, look, this is a solution that Bank of America is using. You should be able to use it too, versus you just hiring a bunch of engineers to hopefully build out a solution that may or may not work for you. Regulatory burden. It's easily scaled with one provider. Each of these banks, they're not going to have to hire large legal counsels to figure out, what do we need to do? Are we meeting our regulatory thresholds, or are we doing what's necessary? When you can have one provider that's already doing the work for you to show, like, hey, this is what you need to do to meet these standards, to stay in law, to stay in business. And then also, critically, it's a tool that scales. That's the beautiful thing about software. And a perfect example is how in April 2020 they launched the small business admin loan solution for Paycheck Protection Program. This was tied to the COVID response, and that was a solution. It was effectively a piecemeal additional solution, for their banking customers to use, where they could turn it on overnight, and literally in the course of a week or two, it was adopted by hundreds of thousands. It was adopted by their banks, which were dozens of banks, and it was rolled out with hundreds of thousands of applications and proceeded with over $50 billion in funding just for that program. So this is an example of, as the marketplace adapts, you're going to need solution providers that can be like, oh yeah, here we go. If you need to be able to make these types of loans, we can offer that for you. That strikes me as incredibly valuable, versus each bank trying to create a solution for themselves. So all these things, sort of fit with the $10 billion opportunity. And, because each of those financial institutions aren't going to want to have to figure out, hey, how do we create a new loan program? Or how do we create a new loan software that's automated, that fits these new, government requirements to get this special type of program? This strikes me as something that fits, nCINO's wheelhouse. So what's the risk reward from here? We've talked about the business and why this company has an unrivaled value proposition, why it likely has legs in the years ahead. But we also need to view it from the frame of shareholders, because you can identify a great business, but a great business isn't always a great stock over, let's say, a 5-10 year perspective. And, we start with the top line results, just understanding, what does the business look like? Before we can underwrite a range of assumptions, we need to understand the base business. And so this is their revenue, where you can see about around 70% is from their software subscriptions to their banks. And then the rest is the rest is about the service, where it's about integrating their subscriptions. When I said earlier that sometimes selling their solutions can take over 18 months for the larger banks, they need to get paid for the integration. But the downside is that integration is really low margin. So you can see while their software is growing, about 60% a year, their service is growing 30%. And their margins on those two respective businesses are very different. Software is closer to 70%, whereas services is closer to single digits. And that's what you see, for example, in 2020, the service segment, that little bar in the bottom keeps popping up, which is annoying, that the service segment's only 6% gross margin. You shouldn't expect that to be a high margin business because it's about integrating their services. So when you're thinking about like what type of operating margin can I apply to this business, you need to consider these different components. You're never likely going to get a high margin on the services component because that's a key part of sort of selling your solution. The profit margin is going to come from the software, from the subscription, not the service. And then another key component is while they're growing, consolidated growth is around 50%. About 80%, a little more than that, is organic, but the rest has come from recent, mergers and acquisitions. They acquired Visible Equity and FinSuite, which are two sort of tuck-in acquisitions that broaden their appeal to their customers. And so, once we understand that, hey, this isn't a pure software business with like 80%, 90% gross margins, but the margin profiles could be a lot lower because of that integration, then we're going to think, maybe the margin profile, the operating margin profile should be lower. So currently it has around $79 share price, which implies around $7 billion valuation. You can see that they did $138 million in consolidated revenue in 2020 or fiscal 2020. So based on their growth rate, somewhere between 30 and 50%, 55%, I'm giving a range of what their outlook could be this year, and slapping on what I think the optimized margins could be. Whether or not it's 15% to 25%. When your software subscriptions are at 60, 70%, but that's only 70% of your business, that limits sort of what the consolidated operating margins could be. So I'm given a range 15 to 25%, and slap on a tax rate 25%. And you can see, the implied net earnings, if this business were optimized for profits right now, which they're not. They're currently unprofitable. Let's be straight about that. But if it were optimized for their margins, they're trading at somewhere between like 200 times and 400 times earnings. And when you think about that, like if imagine if they had their margins optimized right now, and then they're growing at 50%, would that really be that attractive? 200 to 400 times for a business that's growing 50%. Like gut check should be telling you that's pretty darn expensive. Because at that point, your return as an investor is just driven off of what's their underlying growth, their revenue growth, because you've already optimized your margins. That's the reason why I always focus on what sort of optimized margins, because that bakes in what your earnings growth, could be over time. And so then, the second half is the investment period, thinking like 5 years out. Well, maybe you could justify it with their growth rate. And I just don't see it. If they're growing at 50% this year, it's only going to get harder to keep putting up growth rates like that unless management pulls some incredible deals, out of their hat with some M&A that can, dramatically increase their revenue in 1 year or their business in 1 year. But either way, like on my upside, I'm assuming 35% annualized growth, which is 4.5 times their run rate or what I'm penciling out for this year. So 4.5 times, growth over 5 years, slapping on a 25% operating margin, which keep in mind, this business is not profitable right now. So it's not like I'm being, conservative. This strikes me as super aggressive. Slapping a 30 times earnings multiple for 5 years out, gets to 24% downside over 5 years. So I honestly, I just don't see an attractive risk reward here at all. If you think that the valuation should be much better than this, or or that the growth rate could be much better, or their margins could be much better, I'd love to hear it. But I see this as an example of the speculative froth that is sort of commonplace right now in 2020, where there's a broad assumption that stocks sort of can't go down. That's sort of what a lot of people seem to think, because hey, there's Federal Reserve backing this up. Anywho, that's more of a macro commentary. That's why I'm trying to do what's a logical framework for this. But my value proposition to you as a viewer is that you can play around with assumptions yourself. And I provide this sheet, this calculator below the video. You can click on the link, you download it, and you can just start changing the assumptions yourself. If you think there's a lot more upside than what I'm penciling, I'd love to see, how you're doing it. This is my take. I'm not, I'm not super compelled by it. But my value proposition to you is that you can play around with it yourself. That's it. If you want to see what I'm buying in any given month, go to unrivaledinvesting.com. You can see what I buy, what I sell, what I hold. I'm looking for companies with that unrivaled value proposition, with lots of growth potential, and ideally at a reasonable valuation. And your patronage enables the production of these unrivaled investing educational videos. Thank you so much for watching. If you enjoyed this, please subscribe. If you're already a subscriber, hit that thumbs up. Thanks.